The markets are closed, but the business stories are just heating up. Hello, I'm Raine Musñgi. Catch up with us on Business Brief. Asian stocks bounced off a 1.5-year low, and U.S. stock futures pointed higher on Tuesday as markets caught their breath after recent heavy selling on hopes that Washington might be willing to negotiate some of its aggressive tariffs. The rebound in Japan's Nikkei far outpaced other regional markets. Hong Kong's Hang Seng climbed 1.5% despite rhetoric between U.S. President Donald Trump and Beijing in the past 24 hours. Indonesia's financial markets tumbled about 9% on opening from a long holiday during which markets across the world sank in response to rising tariffs. Vietnam's benchmark index also lost about 5.6% after coming back from a holiday. Thailand's benchmark fell over 5% to its lowest level since March 2020. Japanese Prime Minister Shigeru Ishiba urged Trump in a cell phone call to rethink his tariff policies. Trump's decision to impose a 25% levy on auto imports and a reciprocal 24% tariff on other Japanese goods is expected to deal a huge blow to Japan's export-heavy economy. Analysts predict the higher duties could knock up to 0.8% off economic growth.
We will continue to strongly urge the United States to reconsider the tariffs through diplomatic efforts. I've told the President that Japan has been the biggest investor in the United States for 5 straight years, and I am deeply concerned that the tariff policies could hurt Japanese companies' investment capabilities.
Gold hovered close to 2.5-week low, and crude oil recovered after a nearly 4-year low as traders began shifting back to riskier assets from traditional safe havens. Still, U.S. business leaders have also begun speaking out about the damage to the economy and financial markets that could be wrought by President Trump's global trade war. J.P. Morgan Chase CEO Jamie Dimon warning of inflation and a U.S. slowdown. China vowed not to bow to blackmail from the United States as a global trade war ignited by U.S. President Trump's sweeping tariffs showed little sign of abating on Tuesday. The rebuke came after Trump said he would impose an additional 50% duty on U.S. imports from the world's #2 economy on Wednesday in response to Beijing's decision to match a 34% reciprocal duties Trump initially unveiled last week. A spokesperson for the Commerce Ministry said the so-called reciprocal tariffs imposed by the U.S. on China are groundless and a typical unilateral bullying move, and the countermeasures China has taken are totally justified to safeguard its own sovereignty, security, and development interests and maintain the normal international trade order. China urges the United States to immediately correct its wrongdoings, cancel all unilateral tariff measures against China, stop its economic and trade oppression against it, and properly resolve differences with China through equal dialogue on the basis of mutual respect. Well, Hong Kong leader John Lee said the city would sign more free trade pacts to diversify its risk amid a global trade war triggered by what he called ruthless U.S. tariffs. He said we're disrupting the world economic and trade order. In terms of mitigation, Lee said Hong Kong would seek to bolster trade and business linkages elsewhere, including more free trade agreements in areas such as Southeast Asia and the Middle East. The latest additional U.S. tariffs of 34% that were imposed on China also apply to Hong Kong, which is no longer considered a separate trading entity by Washington amid a years-long crackdown under a sweeping national security law.
Together with the 20% tariff announced earlier, the total tariff imposed on Hong Kong products is up to 54%. The U.S. no longer adheres to free trade, arbitrarily undermining the internationally established rules of world trade, and its ruthless behavior damages global and multilateral trade. The reckless imposition of tariffs affects many countries and regions around the world, with huge tax rate increases and covering a wide range of goods, disrupting the world economic and trade order, bringing great risks and uncertainties to the world. We oppose the abusive use of coercion or bullying tactics in international economic and trade relations. Third, any transaction must comply with the legal and regulatory requirements. Hong Kong will handle it in accordance with the law and regulations. I've noted that the State Administration for Market Regulation, or PRC, has noticed the deal and will review it in accordance with the law to ensure fair market competition and protect public interests. Second, we shall strengthen international exchanges and deepen regional ties and cooperation. We shall sign more free trade agreements with countries and economies. Today, Hong Kong's FTA is already covering 20 economies. We're currently negotiating investment agreements with Saudi Arabia, Bangladesh, Egypt, and Peru. We will continue to push for Hong Kong's early accession to RCEP to deepen regional cooperation. The Hong Kong SAR government urges foreign governments provide a fair and just environment for enterprises, including enterprises from Hong Kong.
The European Commission proposed counter-tariffs of 25% on a range of U.S. goods on Monday in response to President Donald Trump's tariffs on steel and aluminum. A document seen by Reuters showed that tariffs on some goods will take effect May 16 and others later in the year on December 1st. The goods are wide-ranging and include diamonds, eggs, dental floss, sausages, and poultry. The counter-tariffs on almonds and soybeans will take effect December 1st. Nevertheless, publicly, the EU says it is still willing to negotiate with the U.S. administration on the sweeping import tariffs.
So it's very clear that we are open for negotiations, and that in parallel we are preparing a potential list for retaliation and other measures for retaliation if this is necessary. We prefer to have a negotiated solution. The relevant partners, Maroš Šefčovič, our trade commissioner, and Secretary of Commerce Latnik, for example, are in very close contacts on that topic. And it is clear that negotiations have to go deep into technical details. So this has to be solved first, and then comes the next step.
U.S. President Trump said that the U.S. continues to have talks with Russia and Ukraine, and they're getting sort of close to a ceasefire deal. This comes a month after Moscow rejected a U.S. proposal for a full ceasefire that Kyiv had agreed to. The warring sides agreed to a limited pause on attacks on energy infrastructure, which both accused the other of violating. White House officials are discussing the likelihood that Washington will be unable to secure a peace deal in the next few months.
And maybe you could elaborate as well a little bit on not providing tariffs on Russia, sir.
So the reason we're not talking about tariffs with Russia is because we're not doing business essentially with Russia because they're in a war. And I'm not happy about what's going on with the bombing, because they're bombing like crazy right now. They're bombing. I don't know what's happening there. That's not a good situation. So we're meeting with Russia. We're meeting with Ukraine. And we're getting sort of close. But I'm not happy with all the bombing that's going on the last week or so. Horrible. It's a horrible thing. It's a horrible thing.
We have to pause for a few reminders. The biggest business stories from around the country and the market's closing data are up next. Keep it here on Business Brief, only on the Bilyonaryo News Channel. Welcome back to Business Brief. The number of jobless Filipinos fell to less than 2 million in February. Let's get details from our correspondent, Sujin Kim, who joins us on the line. Sujin, go ahead.
Performance in February.
Sorry, can we restart that, Sujin? All right, we'll try to get Sujin back on the line in a moment. But meanwhile, we're getting reports that President Bongbong Marcos will lead the formulation of the Philippine response to the sweeping reciprocal tariffs imposed by U.S. President Donald Trump.
60 miles from Bataan to Tarlac. Sa mga pamilya ng mga ating
It's a move that threatens to disrupt trade flows, weaken export earnings, and influence investor confidence across Southeast Asia. Trade Secretary Cristina Roque says the economic team is studying all options, including possible concessions, as it prepares to negotiate with U.S. officials on reducing the 17% tariff imposed on Philippine goods. Roque clarifies that talks with Washington have not yet begun and that no concrete offers have been put on the table. The Philippines is moving quickly to mitigate the impact of heightened U.S. protectionism. The biggest risk this summer may not be inflation, but power interruption, that coming from the Energy Regulatory Commission. On the Bilyonaryo News channel, ERC Chairman Elisa de Malanta says she sees global and local threats to the power supply. She explains ongoing projects, including some critical to baseload supply, are vulnerable to global trade policies, and those can contribute to slow response to problems like equipment breakdown and unplanned outages.
We have plants that are being built that are admittedly very dependent on the global supply chain. We don't know yet the effect of the tariffs recently imposed by the U.S. on.
While the ERC wants power generators to go public to boost transparency, they're temporarily pulling back enforcement just to keep supply stable.
As much as we would want to, pull out the hard enforcer hat and put on the hard enforcer hat, we know it's not going to work, and it's going to be like a self-inflicted wound, because we'll be taking out or pulling out the permits from power generation plants that are fully functional, supplying the system, just because they're not able to comply with the listing requirement. So
right, and we can't. We need all the supply we can get right now.
We need all the supply we can get. So.
Back to an earlier story, the number of jobless Filipinos fell in February. Details from our correspondent Sujin Kim, now joining us on the line. Sujin. Sujin? All right, we seem to have lost her again. But in corporate news, Razon-led Manila Water says it remains on the lookout for offshore expansion opportunities, but no overseas deal has been reached or has reached a substantive materialization. In a clarification to the stock exchange, the water distributor confirmed reports of possible international expansion, but reiterated that none are close to a substantive stage. Manila Water noted earlier disclosed deals, including its April 2024 acquisition of a combined 70% stake in Equi-Pacific Holdco and its May 2024 divestment of 2 Bulacan-based water assets to San Miguel's Bulacan Water Services Corp. Shares of Manila Water higher by about 2%, other Razon-led firms also jumping. ICTSI by about 8%, Bloomberry Resorts by over 3.5%. Meanwhile, the Gokongwei Group says it is tightening its belt on aviation while boosting investments in food and real estate. In a disclosure, JG Summit Holdings confirmed that Universal Robina is hiking capex by 44% to 11.1 billion pesos for its Malvar mega plant and other projects. JG Summit declined to comment further on the Manila Bulletin report that said Robinson's Land is also raising capex by 4.5% to 23 billion pesos to expand malls, offices, logistics, and hotels. But Cebu Pacific's capex will fall 49% to 33 billion pesos this year, citing fewer aircraft and engine deliveries, due to supply issues with Pratt & Whitney. That dragged the group's total capex down nearly 30% to $69.2 billion. JG shares closing higher by about 0.1%, RLC down 0.5%, and Cebu Air higher by about 3%. In other news, an explosive eruption at Canlaon volcano in Negros Island shook residents this morning. The eruption happened for about an hour, with Canlaon sending a massive ash plume 4,000 meters into the sky. The Office of Civil Defense says at least 6 villages in Negros Occidental are affected by ashfall. The volcano has been under alert level 3 since December, indicating elevated volcanic activity. More than 8,000 people remain in evacuation centers. On to the markets now. Philippine shares snapped a 3-day losing streak, the main index joining the rest of Asia in a rally after the Trump announcement in reciprocal tariffs. The PSEI advanced 3.15%. We're going back to the 6,000 level. The value turnover was 6.3 billion pesos. Advancers outperformed decliners, went 127 to 75. Among the day's most active stocks, port operator ICTSI surging 8%, along with fast food giant Jollibee and telco PLDT leading gains for the services index, each surging about 6%. Meanwhile, the foreign exchange market, the peso is currently trading at 57 pesos at 28 centavos to the US dollar, stronger than Monday's close of 57.43. That's a wrap for today's Business Brief. I'm Raine Musñgi. Join us again tomorrow as we bring you stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News Channel. Always on top.